Welcome back. In this lecture, we are going to be looking at what are indices. Because I want you guys to understand the meaning of indices, and understanding that will give you a whole different perspective of trading. Because without understanding what indices are, the strength of indices, the beauty of indices, you won't be able to apply it practically and fundamentally to your trading. And I just want to make it very clear to you in this lecture, through this lecture, the importance and the meaning of indices. Alright, so let's move forward. Let's take a look at what are indices. A stock index, or a stock market index, or any index for that matter, is a measurement of a section of the stock market. It is computed from the prices of selected stocks. It is a tool used by investors and financial managers to describe the market and to compare the return on specific investments. Indices or indexes is the plural of index. So the examples of indices are S&P 500 index, Dow Jones Industrial Average Index, FTSE 100, etc., etc. So these are few of the most popular indices globally, which people look at on those business news channels, scrolling down or to the right of the TV screen. So these are some of the more popular indices. So what are indices? They are nothing but measurements of a section of the stock market, and they are computed from the prices of selected stocks. It is a tool used by investors and financial managers to describe the market and to compare the return on specific investments. So if you hear of anyone speaking of where's the Dow Jones today, or where's the Nikkei today, or the Dow Jones has fallen by 2% today, so what that tells you is that the collection of the stocks of Dow Jones Industrial Average is nothing but a collection of a group of stocks which kind of represent the entire stock market, because they have the biggest and the most representative stocks in that group. So if the Dow Jones has fallen by say 2%, you can kind of assume that all the stocks in the stock market, in that particular stock market or stock exchange, may have fallen around the range of 2%, 1 to 2%. Yes, there would be exceptions where, in spite of stocks falling, in spite of the index falling, there could be stocks which are in the positive, or who may not have fallen at all, or who may have fallen more than 2%. So there are always such cases. So it's not a given rule that all the stocks will have to fall by exactly 2%. It's just a thumb rule that it is representative of the entire stock exchange. So you can kind of assume that the stocks must have fallen by around 1 to 2% if the Dow Jones Industrial Average Index has basically fallen by that much. But again, like I said, it's not an exact science, but it's representative of mostly all of the stocks in the stock exchange. Okay? So if someone basically tells you or talks to you about the S&P 500 or the Dow Jones 30 or Dow Jones Industrial Average 30 or DJIA 30 or the FTSE 100 or something like that, you should know that they're talking about these stock indices, and they are representative of the stock market of that particular stock exchange or the country, and what they are basically talking to you about and what it really means. So this is what indices are, and in the next lecture I'm going to be telling you about why are indices important. So I'll see you there. Bye bye.